All right, let's quickly turn our attention to the markets now. The JSE will be contending with a surging oil price amid concerns that the West is gearing up to ban Russian oil and gas. The local index struggling on Friday, losing more than 3%, but higher commodity prices have helped shield the local bourse from the global turmoil. Karl Gevers is portfolio manager and co-founder at Benguela Global Fund Managers. He joins us now for a sense of how the JSE is performing in early trade. Karl, thank you very much for your time and indeed your patience. Take us through how the local index has opened in early trade after that steep drop in the last session.
Yes, good morning, Xoli. Our market opening in the red, following on Asian markets that are taking a hit this morning. And again, it's because of the concerns around chaos within raw materials, supply chains, and all of this due to the war and with increasing sanctions on Russia. So that obviously is a driver for commodity prices, and we've seen this morning that Sasol, Anglo Gold, Harmony, Goldfields all up more than 5% on the back of those stronger commodity prices. We also saw the oil price hitting new highs, hitting the $135 per barrel level. So I think certainly a lot of uncertainty in the market, and our local stocks, obviously the non-mining stocks, under a bit of pressure this morning, continuing from last week.
Let's talk about the concerns over the West, which are, or should I say, who are looking to ban Russian crude oil, perhaps I should say, which has prompted mayhem in energy markets. Give us a sense of how the oil prices as well as gold is faring in the supply concerns that are looming as a result.
Yeah, so I mean, as sanctions have been piling up, the one area that has still been flowing has been the oil market, where Russia is quite a big supplier into the global market, and we've seen now that the Biden administration, so the US and Europe, are discussing a potential ban on oil from Russia. So that's becoming a real possibility to actually happen now, and for that reason the oil price jumped 10%, and as I said, it reached $135 per barrel. It's currently trading at about $126 per barrel. So certainly a lot of supply concerns there. On the gold side, I mean, also jumped up to $2,000 per ounce, currently at $1,980 per ounce, and that's obviously on the back of the uncertainty created by the war.
Let's talk about the global food prices, Karl. They jumped to a record high last month, just as this war was starting. Will this war make things much worse?
Yeah, I mean, we've seen food, soft commodities like wheat and sunflower oil, even fertilizer jump on the back of the war that started literally on month end. So it'll certainly impact the prices further. Wheat, for example, last week increased by 40%, and the main reason here is that Russia and Ukraine are big suppliers of some of these commodities, and Russia, because of sanctions, won't be able to supply the globe, and Ukraine, obviously because of the war, won't be able to plant and harvest, for example. And on top of that, we've got other commodity prices like input costs, like oil price, that'll continue putting pressure on these input costs for food producers, and I think it'll become, the inflationary pressures will be quite relentless in that space.
Yeah, let's end our conversation with a bit of company news. Struggling Massmart Holdings releasing, or should I say publishing, their results for the 52 weeks, which ended on the 26th of December 2021. How did they perform?
Yeah, so Massmart, as you said, struggling retailer. The results for the year to December weren't great. Headline loss per share of R7.05. It's within the guided range of where they indicated they would probably be. Sales were down 1.9% for the year. The main reasons are, the COVID impact. So we had 2 waves during the last year, and lockdowns linked to that, and civil unrest where Massmart had a few of their warehouses destroyed, and that impacted stock availability, and also a 1.5 billion rand write-off from losses there. So I think overall disappointing. I think the main disappointment is just how far they're lagging their peers, and I think for that reason the market is a bit concerned, and the share price down this morning at one stage, down 8%. I think currently it's down about 6%.
Karl Gevers, thank you very much for that markets update. He is portfolio manager and co-founder at Benguela Global Fund Managers.